Good afternoon. It's Midcap Radar time, live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Fatakia. With me, as always, is Vivek Iyer. And Vivek, good afternoon. It seems like the bulls want to take some profits before they go into the holy weekend. But the Nifty Bank is remaining resilient. But it's been a fairly okayish week for our markets, regardless.
Good afternoon, Horma is absolutely right. It's a truncated week, so that's something that's also ensuring that a little bit of profits are being taken off the table. We have quite a lot lined up on the show. Let's start off with the top headlines. Stocks see a volatile trading session. The Sensex and the Nifty trade flat. Mid-caps mildly underperform. Financials clock some gains, while realty and auto drag.
Shares of PB Fintech continue to decline. The stock is down another 6% after a similar fall yesterday. This after the company announced a near 700 crore rupee investment in its healthcare arm.
Bharat Forge under pressure on news that the US Environmental Protection Agency may roll back environmental regulations. Regulations were expected to positively impact Bharat Forge revenues in H2 FY26 and H1 FY27.
Gensol Engineering is locked in a lower circuit after the board has approved a 1:10 stock split and also approved raising funds worth up to $50 million. There is no reaction in the stock, remains in a lower circuit.
Adani Green trades more than 3% higher after Macquarie initiates coverage on the stock with an outperform rating and a target of 1,200 rupees a share. The brokerage expects the company to lead India's energy transition and generate nearly $2 billion of annual cash flow.
Continuing to remain around that 22,450 mark is the Nifty. That is the level the index is fighting to defend, as it has been doing so over the last 5 trading sessions. It's been slipping below these levels on an intraday basis, but is managing to close above that since the 5th of March. So that is the important level that you'll have to track for the benchmark index. For the Nifty Bank, though, it's fairly okay, 100 points higher on the index off the highs, but continuing to trade above the mark of 48,000, and that is been the outperformance that the Nifty Bank has shown over the last 2 trading sessions. The mid-cap index absolutely quiet again off the highs of the day. There has not been any significant movement in either of the indices. Of course, there is plenty of activity in specific stocks though, and which are those names? Vamakshi is here to tell us just that. Vamakshi, good afternoon.
Good afternoon, Hormas. The mid-cap index as of now is reeling under pressure today, and the stocks that are actually contributing to this kind of decline includes PB Fintech. As you mentioned, there was a news flow out there that stock is down nearly 4.97%. KEC International is another counter that is down and out in trade, down nearly 6.5%. Sapphire also trading close to the day's lowest point, down 4%. And Bharat Forge, again, news flow out here, the stock is down and out 4%. But on the flip side, let's also look at some of the stocks that specific themes that are actually buzzing in trade. Oil and gas stocks are up and away. MRPL is up nearly 7%. Chennai Petro trading close to the day's highest point, up nearly 3.3%. Oil India up nearly 2.7%, and Gujarat Gas also in focus. Apart from that, we also have a whole host of defense names that are buzzing in trade today. Data patterns, that stock is seeing an uptick of almost 8% in the trading session today. Mazgaon Dock, BEML, as well as Garden Reach Shipbuilders are some other counters that are trading with gains today. Let's also look at some industrial names. Industrials have been under pressure over the last couple of months. They're seeing a bit of recovery, with Thermax leading the pack up nearly 6%. Kirloskar Oil too, another counter that is up. Jyoti CNC as well as EIL all are up and away in trade today. Lastly, let's also focus in on some of the stocks that are gaining in the overall index. We have Godfrey Phillip, that stock is locked in upper circuit, up 5%. So is ITI. Solar Industry is also up nearly 4%, and JB Chem and Pharma also up 0.3%.
Thank you so much, Vamakshi, for joining us and giving us a sense of what's buzzing as far as the broader end of the markets are concerned. Well, let's now welcome Vinay Rajani from HDFC Securities for a technical check on the market. Good afternoon, Vinay. Thank you so much for joining us. Markets don't seem to be able to sustain at high levels. Do you see further selling pressure, or do you see a bounce coming in from these levels?
Yeah, so good afternoon. Yes, for last 5 trading session, Nifty has been oscillating between 22,300 to 22,700. So 22,700 that we are tracking closely. Once we see level above that, then we can expect some momentum coming back into the market. But till then, we can expect some choppiness to continue. Mid caps, small caps are also not performing. Breadth is not that good in the today's trade. So what we are asking to our clients for the trading, we are asking them to hold their long position with the stop loss of 22,300. That is the stop loss should be in the trading long position. But overall, once we see 22,700 taken out on the upside, then we can expect a momentum coming back to the market, which can take it Nifty towards the next target of 23,200. So yes, there is a hope that it will, because oscillators and indicators that we have been tracking are suggesting some strength in the index, and whatever recovery which started from 22,000, it should hold ultimately. So a bit of positive bias waiting for the breakout about 22,700, and above which we can expect a 23,200. But at the same time, we are asking our clients to keep a stop loss at 22,300.
What about specific stocks, Vinay?
Yeah, so a mix of bag, like on the long side, Kotak Bank from the private banking space looks very strong, trading around its 52-week high end, looks very strong. So Kotak Bank around 19,831 one can go long for trading. One can keep a stop loss at 1950. On the upside, I'm expecting a target of 2060 for next 2 to 3 trading session. On the short side, I would go short on Zomato March future. So some of the new age tech companies are showing weakness on the chart. One of the stock is Zomato along with the Policy Bazaar. So Zomato March future can be shorted here around 203. I would suggest a stop loss at 208. On the downside, we can expect a target of 195.
Thank you so much, Vinay, for joining us. So, well, if you could just bring up the chart of Bharat Forge as well, that particular stock now lagging at the day's lowest point. Even Morgan Stanley has come out with a report on the EPA rollback, and they see EPS cuts in case this particular regulation where there was expected to be some environmental protection coming in for trucks not coming through. So Bharat Forge at the day's lowest points. But as we now slip into a short break, here is some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Welcome back onto Corporate Conversations. Then Sai Life Sciences is the stock in focus. IIFL Securities recently initiated a buy rating with a price target of 825. Now the brokerage believes that return ratios will improve to mid to high teens over FY27 to 30. But how will Donald Trump's tariff war impact the CDMO space? We are now being joined by Krishna Kanumuri, who is the managing director and CEO of the company, to discuss the road ahead. Krishna, good afternoon. Thank you so much for joining in. I'd like to start off with what's happening in the US, right? There has been so much flip-flop over tariffs. Pharmaceuticals are also in the firing line. 2nd of April is that date. If there are tariffs that are imposed, what kind of impact do you see on your company? And if you could also tell us what's your exposure currently to the US?
Look, I think if you look at what's going on tariff, there are a lot of unknowns at this point, right? And as far as our conversation with customers go and so forth, I don't think people are thinking too much about tariffs. And also, if you look at the CDMO sector, we are primarily supporting innovators, and they generally tend to move much slow. I don't think they make any long-term decisions based on short-term pricing. And so at this point, our view is neutral. I don't think there's going to be a pro or con for the business. I think so far it's been business as usual. And at this point, we believe it's going to be business as usual going forward, irrespective of what happens with the tariffs. We don't see a material impact one way or the other.
Krishna, so you're saying that you don't see a material impact as of now, if and when tariffs, if they do come. Now, the second question is, there's a lot of interest in the entire CDMO space on account of the impending, US Biosecure Act. At this point of time, it appears as though the US Biosecure Act has been put on the back burner. But, a couple of sell-side analysts have pointed that the damage is probably already been done, and Indian pharma companies are likely to see much higher RFQs and probably converting that into long-term contracts. What is the on-ground scenario as of now? What is the number of RFPs or RFQs that you're working on, and how many of them have translated into full-scale projects?
Look, I think the analyst is correct. I think basically what Biosecure Act did, look, the whole global deleveraging started happening post-COVID, and the last 3-4 years, we all have seen substantial increase in business. Side particulars benefit significantly from this trend based on our past growth rate of the last few years. This is based on a China Plus One strategy. And this momentum has really continued or accelerated last year based on the depth of relationships we're building with existing customers and new customers coming in. And if anything, we've seen an increase in momentum in the last few months from even what we saw in 2024. So long story short, I think Biosecure Act did its job. It probably accelerated the process of people basically relooking the supply chains. Momentum continues from both number of customers coming to join side and visit us, as well as the depth of relationships and new RFPs from existing customers as well. So I think we are very bullish. And if anything, like I said, the trend has accelerated rather than declined in the last few months.
What are the inquiries that you're receiving for your CDMO operations from your clients? Because has there been an increase? What is the situation on the ground that you're currently witnessing?
It's been increasing. Like I said, it's been increasing. It's accelerating even this year compared to last year. So we're seeing a significant increase in terms of inquiries.
And do you expect that to sustain going forward as well?
Look, I think if you really look at it, India is there for next 5-10 year opportunity, right? I think we're just the early phase of this opportunity. And what you're seeing now in terms of inquiries is customers trying to figure out who their partners will be and who they expand with. So I think what you're seeing today is only a small fraction of the overall business opportunity. And I think you will see this real opportunity coming in the next 5-10 years. You will see good growth in the short run, but I think the real volume is a 5-10 year opportunity in front of us. There's significant capability and capacity building which is going to happen in the next few years.
Got that. Krishna, let's try and quantify the opportunity. Over the next 3 years, how can you grow the business? What is the anticipated CAGR in terms of top line growth, EBITDA margins as well as PAT? And also give us some sense in terms of the Schrödinger contract. We believe that is for the CRO space. So what is the duration or the tenure of that contract, and how does it impact your financials?
Look, from a standpoint of how to quantify it, we've already guided the market to 15-20% growth. The reality is this is a cyclical business. It's very hard for us to pick quarter to quarter. I think you're going to continue to see quarterly variations, even annual variations. But over a 3 to 5 year horizon, we are forecasting a 15-20% top line growth. Also, we're showing a margin increase. We're at about 24% margin. We are forecasting a margin increase to 20-30% EBITDA, which is going to basically imply that we'll have a faster growth rate in terms of our profitability vis-a-vis top line growth. And so I think top line is good and bottom line looks very healthy. And I think these figures are definitely achievable. And I think there's going to be significant capacity addition, which will probably play out for us in the next beyond 3 years, because it takes a couple of years to add new capacity. So those will play out over the longer period. As far as Schrödinger contract, I think it's a 5-year contract. It's been a very important contract for us in terms of demonstrating the market that we can build dedicated facilities, run fully integrated programs with discovery, development, and also biology. I think we are seeing several other relations also at this point, which are growing into significant scale. And I think this is just a blueprint for building larger collaboration for us on the discovery side. And we are seeing several collaborations moving in that direction.
I was reading this brokerage report, which it says that you have 8 tech transfer projects, which could add up to around $25 to $30 million in your combined revenue in FY28. Is that a fair assumption to make, or do you see that number being slightly higher?
Look, I think I'll stick with that assumption, right? There's no point giving guidance beyond that.
All right, Krishna, thank you so much for sparing time, joining us today on the show. Wish you good luck for the road ahead as well. The management there of Life Sciences confident that the Trump tariff tantrums may not have a significant impact on the business. The stock currently trading with gains of around 0.5%. And by the way, PB Fintech though continues to languish at the lowest point of the day. Another 5.5% knocked off in today's trading session after yesterday's fall. So it's almost 8 to 9% gone in the last 2 trading sessions after the investment that it announced in its healthcare arm. We take a short break. More on the markets and specific stocks on the other side. Stay tuned.
Well, thanks so much for tuning in to CNBC TV18. Make sure you follow us and stay updated on all our social media platforms.
Welcome back to Midcap Radar. Well, Bharat Forge is the stock in focus after US Environment Protection Agency has announced a rollback of environmental regulations. Sudarshan joins in to tell us more on this development and how it impacts the stock, which is trading near the day's lowest point.
First, I want to say what's exactly the news. EPA administrated. EPA is basically Environmental Protection Agency of US, and that has announced rollback of certain environmental regulations. Now, how this is going to, and those rollback of environmental regulations also include rules related to emission standard for vehicles. Now, why Bharat Forge is in focus? So, recently in one of the JPM conference, Bharat Forge has said that because of these regulations, Class 8 orders in H2 might see a significant increase. Now, Elara has come out with a note, and it says that if these regulations are rolled back, so CY26 volumes for Class 8 will be normalized one, and also there was an expectation that in CY27 there might be a steep decline in Class 8 truck orders. That also may not happen. And Class 8 currently contributes 15% to Bharat Forge standalone revenue and 8% to consolidated revenue. Because of this, you are seeing a downtick in Bharat Forge trade.
4.5% lower now on Bharat Forge at the lowest point of the day now. Sudarshan, thanks a lot for that. Moving on then, there are no reasons for the Indian market to be in a bear territory, says Nilesh Shah, the Managing Director and CEO of Envision Capital. He also added that there are opportunities now emerging in the mid-cap IT space. Listen.
In the very short term, we are going to be correlated with the NASDAQ and the US markets as far as the big IT companies go. I think currently the large cap names are trading currently at 23, 24 times trailing earnings. Probably I would still think there's a bit of a downside to the large cap IT names. However, having said that, clearly the big opportunity is in the tier 2, tier 3 IT companies. Clearly believe that those companies which will work on developing their own agentic AI solutions will be the big winner for the medium to long term. And I think that's an opportunity which can give them strong double-digit kind of growth over many years. I clearly believe there are no strong reasons for India market to be in a bear zone. I would still think from a medium to long term perspective, it still has to be the mid and the small cap. The mid and small cap companies are growing at a faster pace versus their large cap peers. They're becoming more capital efficient. Their access to markets, their access to capital has kind of improved quite significantly over the last few years, which clearly puts them in a very vantage position. Given their relatively smaller size and being very strong in several niches, gives them basically a strong tailwind of growth. So clearly, the space to be in for medium to long term is the mid and the small cap kind of space. The large caps have been struggling with growth. I mean, whether you look at large cap IT companies, large cap FMCG companies, large cap banks, they have been growing below industry growth. They are the guys who are getting challenged by the challengers, and therefore are essentially kind of have been reporting very tepid growth.
Well, some very interesting perspectives coming in there from Nilesh Shah from Envision. Well, one sector of the market that's seen a bit of a pickup or a bit of a rebound is actually the pharma pack. So a couple of large pharma names, look at Sun Pharma, look at Dr. Reddy, look at Cipla, all of them have rebounded from the day's lowest point. In fact, the pharma index now slightly in the green. Sun Pharma near the day's highest point, around 0.5% higher. The other set of stocks that are doing quite well is actually the banking pack, and Kotak Mahindra Bank has been a clear outperformer, especially amidst the carnage that we've seen amongst some of the other mid-cap names. So Kotak Mahindra Bank now up 0.5% at the day's highest point. One stock from the broader end of the market that's doing quite well and it's seen a bit of a buying emerge, especially in the last hour, is GMR Airports. That particular stock is now trading with a gain of close to 1%. GMR Airports is the one that we're talking about. And last stock that we're discussing is CAMS. This particular stock has seen a significant selling pressure, but CAMS will remain in focus. So, there's a lot of news reports indicating that there could be an IPO coming in from NSDL, and CAMS on the back of that, some sentiment rub off, maybe this particular stock up almost 4%. But with that, it's all the time we have on this edition of Midcap Radar. Mutual Fund Corner when we return.